What's up, guys? Welcome back to DCA. So what we're going to do in this video today is take a look at the Bitcoin market, and I want to provide you with a little bit of hopium. Now, it's not going to be the usual kind of hopium you hear on YouTube where people are telling you that, hey, the market cycle bottom's in. It's in at 40K, it's in at 30K, all the way down to where we're sitting at now at 17K. You constantly have heard market cycle bottom is in, we're turning around, it's going to be a big year for Bitcoin. And these people were telling you that, we're looking at the end of year 2022 where we start setting new all-time highs. And now they've just kicked that can down the road. And now we're talking about 2023. So I want to give you hopium today that in 2023, you will be able to assess that information for yourself and determine whether there's any realistic probability that a market cycle bottom is actually in. We can't do that with any one metric. So I'm not going to be able to give you everything you may possibly need to do today in order to understand that. Anyone who's telling you that this one thing is all you need to look at, or this one equation is all you need to look at in order to determine where a market cycle bottom occurs at, they're selling snake oil essentially. Because that is not how a market cycle works. You cannot identify a precise point of a market cycle bottom. There are too many moving cogs in this wheel in order to simply say that at this price, because of X, Y, and Z, this is where a bottom will occur. It simply doesn't work like that. We can establish various price levels that we think a bottom may occur, but we can't definitively say at any one of them that a bottom will occur there. So what I'm showing you today will be a way that you can say that, well, the evidence is supporting the fact that we're at a bottom. And so if you have enough evidence, if you're able to fill enough check marks that say, okay, this evidence suggests that we're at a bottom, so does this, and so does this, and so does this. At some point, it becomes overwhelming. And then you can say with some degree of confidence that, hey, we might be at a market cycle bottom and making a turnaround from here. So I want to arm you with the first piece of knowledge that you can look at yourself. As long as you have TradingView or can access TradingView, you can look at this information and see for yourself what is happening in this market. Specifically, we're going to be looking at Bitcoin because I still believe that Bitcoin is the weathervane for the entire crypto market. So, Bitcoin may not make the same kinds of gains that a lot of these altcoins will make, especially after they've gone down, things like Solana now at this point down 95%. But Bitcoin is still the market mover. Ethereum has certainly made, strides throughout 2020, 2021, and now into 2022. It's definitely made strides. And in fact, we'll even be looking at Ethereum likely tomorrow. But Bitcoin is still the biggest player in this market and therefore deserves our primary set of attention. So with that said, guys, if you guys like this type of content, you could hit like and subscribe. You could also head over to our Discord channel where we do a lot of discussion about the macroeconomic picture and the crypto market. And you can sign up for all of my risk metrics there and various TradingView indicators that I release all for free. So with that said, guys, let's do it. What are we looking at here? And this is probably something that you've seen a million times. You've probably seen it. You hear people talk about it quite a bit, and we've heard about it talked about different ways, especially recently. So we're looking at the number of active addresses for Bitcoin. Now, one of the primary ways that you're frequently hearing about it in, the recent weeks and months is the number of addresses that are accumulating Bitcoin. And we've heard things like, the whales are dumping Bitcoin and the shrimp, they're accumulating Bitcoin. And let me just say one quick thing before we jump into this, because I want to address that point. I don't think that the whales are dumping Bitcoin per se. Everyone in general has been dumping Bitcoin. It's why we've seen the price go from 69K down to around 17K, right? But I don't think whales in particular are dumping Bitcoin. Why it appears like that, or what is actually happening, is the fact that because of events that have played out over the last, ever since May, essentially, because of those events, what we've seen is people are losing faith in exchanges. Exchanges tend to be quote unquote whales. And, you never hear people making that distinction though. So these whales or exchanges, things like FTX, them being forced to liquidate, or individuals pulling their Bitcoin off of exchanges and putting them into their cold wallets. So I don't think that there's this, this narrative that we've heard that, oh, all of the, everyone out there is just accumulating Bitcoin. All the smaller investors, they're accumulating Bitcoin at mass levels right now, never seen before. Because how it works is all of these Bitcoin are held in a central pool or multiple central pools on these exchanges. So when you pull that one Bitcoin off and you put it into your wallet, what you've essentially done is told the metrics that, hey, look, people are acquiring Bitcoin and the whale is selling. But the whale wasn't selling. All that you did was you took your Bitcoin off of the exchange. Well, you might hope it's yours. If it's on FTX or various other places, it might very well not be yours. But what you've done is moved it from there into your wallet. And so it appears like people are acquiring Bitcoin in mass levels, but it's very likely that they were actually just holding that Bitcoin on the exchange in the first place. That's the first thing I wanted to talk about. And at the same time, that doesn't mean the whale is dumping. That just means that you transferred your Bitcoin from your centralized exchange onto your wallet, wherever that may be. So I kind of wanted to address that because I keep hearing this and it's been bothering me a little bit. So I just wanted to talk about that fact. What I said at the beginning of the video is I want to give you a little bit of hopium that you will be able to analyze these markets for yourself. But I also want to give you a little bit of hopium that things, while they look bad, they may not be as bad as they appear to be. Okay. And what do I mean by that? Well, the price is the price. It doesn't lie and it is what it is. So we're sitting at $17,000 and that sucks. There's nothing else to say about that. That is terrible. So we've come down from around 69K down to here. So that's around 75, 76%. So we have the price down here. Up here, we have the active addresses. Now, the first thing I want to quickly show you is when we look at the active addresses, and I'm looking at these on a 30-day moving average, these things like all-time highs and single-day all-time highs, it's meaningless. It's all just a massive speculative wave in a fervor of people coming in and trying to grab a buck right at the end. That has nothing to do with the long-term price of Bitcoin. So I kind of don't like the fact that we oftentimes measure from the all-time high because they tend to be these, massively speculative price points. Now, the good thing is for Bitcoin, we actually didn't really have that this time. Right? We sort of leveled off right at around 60K, kind of went sideways from February all the way out to essentially the beginning of May. And then we were right at around 65 to around 70K through October and November. So we didn't have that wild blow off top type event, at least with regards to Bitcoin, that a lot of people talk about. So I think that this was a much healthier bull market for Bitcoin anyway. This tends to not be a good thing, and it tends to scare more serious investors away when you get this just rapid blow off all the way up to 20K and then this rapid dump all the way down to around 7K. And it did that in just about a month and a half or 2 months. So if you think about it from an institution's perspective, they can't get out of the market fast enough in order to really capitalize on that, right? So if things turn over on them, and the market really starts to dive like it did here, that's not a good thing for institutional type involvement. And so these slower moving markets like we saw here that went from approximately 60K up to around 65K and then 65 up to around 70K over an extended period of time, that's more amenable to institutional involvement. Now, what I want to show you though is the active addresses, and I want to talk about why what we're seeing is actually a very positive trend. So when you look at this 30-day moving average for the active addresses, you'll see that back in this last market cycle, back in 2017, that is, we were sitting at around 1.1 million and it went all the way down to 550,000 in just a 3-month period. So think about what type of flight from the network there was during that time period. And that essentially tells us that anyone who was investing during that time, they were essentially a speculative investor. And, that still might be the case. There still might be a huge number of speculators in the market, but that shows a rather large lack of conviction because people weren't stepping in to, buy up these dips. What they were doing was sitting on the sideline. trying to get out of the market because, ultimately they didn't believe in Bitcoin and thought that it was going to continue to trend down. And so that sort of leveled off right around here at around 550,000 active addresses. And that was in April. And you'll notice that that was right around here. So at this point, the market had been trending down or at least sideways for about 4 months. Now, from there, what happened? The market hit that bottom, or, hit that bottom with respect to active addresses, not with respect to the price, as we know retrospectively. And we hit that bottom and the addresses started to move up. And you saw the 30-day active address average trending up with time. So it recovered all the way to around 700,000, right? And what happened at that point? Well, the market then crashed. We went down to around 3,000, 3,100. And what happened right there? So we consolidated for a bit of time. And then this is the key point I want to make today. You saw the market really pick up steam. So when it got down to 3,100, a lot of the people who thought that Bitcoin was overvalued, and let's face it, this was a new asset with not many use cases. There wasn't much built up in the crypto market. It's very likely that $20,000 was an absurd valuation at that point. So what we saw was once the market crashed down to this level, people felt that the price was at a much better valuation and they started to enter the market, and you saw the active addresses really take off. And this is one common theme that we've seen with this market in every single market cycle. So if we just come back and look at 2011, you'll notice that the same kind of thing happened. We hit this market peak up here at around $30. And remember, this is a much smaller market at this time. The market was much smaller at this time than it is now. But we see an identical trend because in spite of the fact that there were much fewer participants. In fact, when we look at the active addresses, we're talking about 25K at this point. In spite of it being a smaller market, human behavior is very similar. Okay. So the scale may be different. We may be looking at a much smaller market and, much larger percentage changes here. But overall, the same idea underlies what's happening here in 2011 as what's happening in 2014 and what happens in 2016 as we move into the 2018 bull market. And then ultimately what happened in this most recent bull market into the decline that we've seen. So we saw that the active addresses rapidly falls off. And what sort of sparks the change for the upcoming bull market? Well, you can see right here, right at around April of 2012, we get this big spike in addresses. So we go from around 15K 30-day average up to around 35K. So once this happens, once we see this large spike in addresses, that's when the price really starts to move. So you see this start to happen right around here in May of 2012, and then we start to head in the positive direction. We break out of this consolidation. So you can see that we're consolidating right here. And then as the active addresses spike, we start to break out of this consolidation. And this just happens exactly like this in every market cycle. We're moving up in 2013. We're moving up at the end of 2013. We sort of hit that peak. Then we sort of fall off again. The active addresses fall off. Now, what you'll notice is in this cycle, in this 2013 cycle, something unique happened. And I don't think this will ever happen again necessarily. And that is people saw what happened in 2011 and into 2012. And they saw it happen 2 times in the last year, this price move up to around $200 and then a second price move up to around $1,100. And people are like, this thing's something I probably need to get involved in because it's making waves in the market. And we've seen just a massive increase in price over the last 4 years at this point. Okay, so we're talking right at the end of 2014. And then we see it yet again here. So, the active addresses, they're moving up all through 2014. But then what happens? And yet again, we see a huge spike in the active addresses. And this happens right around October of 2015. We see this massive spike in active addresses where we go from around 300K all the way up to around 450K. And this happens in just a 2 or 3 month period. So a 50% increase in the number of active addresses in a very short amount of time. We've had this long speculative market where, we're going on this huge rally up to $1,200, $1,100. And then we have this massive crash, exactly like we've seen in every market cycle. Okay. So we go down 85% or so. And from there, That's when people get excited about getting into this asset and you see the addresses rally. From there, what happens? We all know. That's when we go up and we start to make this new bull run right at that exact point. So you can see right after the spike, that's when this bull run starts. So one key element of every bull run has been a huge spike in active addresses. Now, even if you come out here and exclude this huge spike that we saw where we went from around 550 up to around 800 or 900,000, which took us, mind you, from 3K all the way up to around 13K, we saw yet again this same sequence of events play out on a somewhat smaller scale, because a lot of people who were going to get involved in this market cycle already did right here in 2019. But we saw it right after the COVID capitulation event. You see a huge spike in the active addresses in May of 2020. And that coincided right here with people saying, hey, this is my second chance. If I missed it before, now I need to get in. And so you saw a large number of people enter the market. So the active addresses went from around 700K up to around 900K. And that is when, this had been kind of a resistance level. If you look here, right at around this zone, this was a zone where we'd got up to and then kind of got rejected right here. And we finally broke above it right here before going on this huge run. And the same thing kind of played out here, right at around this 900,000 active addresses in July of 2019. That's kind of where we got rejected and the price needed to consolidate for some more time. And yet again, right here, we kind of broke through it. And when we broke through, that's when it was time to start the party. And that's exactly what we saw. Each market cycle, and I think this is critically important because ultimately, I don't oftentimes, you guys, if you watch this channel, you know that I don't try and get overly excited about things or, overhype things or make things seem like they're more important than they possibly are. But I think that if you're going to see another bull run, and ultimately I do think you will see one eventually, it's going to come in an identical form to what we've seen in the past, where you're going to see the active addresses trending along a sideways path or, slowly trending up. And then you're going to see an explosion in the active addresses. You're not going to get a huge price run to the upside if you're seeing that the addresses trending sideways or downward. I think that yet again, what you're going to see in this market is once the active addresses really start to move to the upside, and they start to break above. So right now we're sitting at around 955,000. Once they start to break above that level, I think that is when you can say that, hey, it's very likely that this market is now making that uptrend that everyone's always talking about, the uptrend that they've been talking about ever since 50K, telling you that 40K is the bottom, 30K is the bottom. Well, we didn't have the evidence to support that. So when they were saying at any given price at 40K, 30K, 20K, when they were saying, hey, the bottom's in, the bottom's in, the bottom's in, and they have been saying that, well, all we had to do was look and say, well, where's the evidence? I don't see it. So this spike that you see right here, this spike right here, this was starting in July into November. This was that second rally where we actually did go on to make that all-time high. And ever since then, what we've seen is essentially a downtrend. Now, there have been some small spikes like we saw here in May and like we saw here in November, but we always tend to have these spikes from our baseline when there's any type of capitulation event, because a lot of people are getting scared. They're moving their Bitcoin either from a cold storage onto an exchange in order to sell it, or they're moving it from an exchange onto a cold storage wallet. And so that's kind of how you get these spikes. The last thing I want to mention on this chart is the fact that what we're seeing right now, in terms of comparing it to prior market cycles, a few things kind of jump out at me. And the first is that we have been kind of in this uptrend. We've been making this uptrend now ever since 2016, and that continues. So this is a long-term uptrend, and this is kind of where the hopium lies in terms of the market recovering. So I'm not sitting here implying that the market's going to recover anytime imminently, but the fact that you still have, on average, anywhere between at its low 850,000 up to around 1 million active addresses, that is a very positive sign. Think about it, in terms of the overall market. right? We hit a high at around 1.2 million back here during the heights of the bull run. And now at this point where we're sitting at, you're actually seeing us hanging around those levels. So there is still interest in this asset. And anyone who's saying that Bitcoin, it's going to zero and all of this kind of stuff, Bitcoin may very well go lower. And I don't know where we're going to go to in terms of an actual bottom, and it could go much lower. Okay. But I think what you've seen here is, in spite of everything that's happened, in spite of all the all the people shilling Bitcoin, shilling 250,000, 300, whatever Bitcoin, and telling you that this has to happen, that we can never go below X, Y, and Z. We've gone below X, Y, and Z at this point. And yet you still have people maintaining conviction in the asset, still have people who are dollar cost averaging consistently. And that's what you're seeing here. This is what this is encapsulating. So this asset continues to have interest at a much higher rate than we can compare to in the prior cycle. When you just look at how far we've come down, from where we're at right now, it's around 20%. Okay. And so we're 602 days out. Let's take a look at where we were 602 days out from the peak in the last cycle, right? So 602 days out, we were somewhere right around here. We were down around 37%. So the decline that you've seen in the number of people who maintain conviction in this asset is relatively small compared to what we've seen in prior cycles. And ultimately, I think that's a good sign. Now, the reason that you've seen the price drop like this is because of the fools running these big hedge funds and these, some of these exchanges. So ultimately, what we're saying is that in order to see one of these rallies, you're going to have to see the active addresses really start to make a move to the upside. Now, the last thing I'd like to show you is this. What I'm expecting to see is, you can see that we're in this uptrend, and this is a positive sign. The fact that this has not dropped below this uptrend and that we continue to gain interest over time, I think that's a very positive sign for the market. But what will a actual bull market look like? And I think that over time, what you're going to need to see, and we're talking, ultimately, I think we're talking maybe 2023, but I'd be surprised if we really go on a run in 2023. But, that's neither here nor there. That's not how I'm approaching the market. I'm dollar cost averaging. So I'm not trying to, it's got to happen right here. That's not what we are doing on this channel. What we're doing here is assessing the market based on the developing situation. So we're dollar cost averaging and we're preparing for that bull market, and then we'll be ready to act accordingly. So whether it's in 2023, whether it's in 2024, or who knows, maybe it's in 2025. We don't know when it's going to be. But what ultimately I expect to see is a break above this trend line, this resistance line that we've seen, where this has kind of laid the ground for rejecting the market. Back in 2018, multiple times we saw Bitcoin get rejected off this level. And if we just, we can draw that over here so you can maybe get a better view of it. I'm going to make this red. And this was the line that we got rejected off multiple times. The price really couldn't go on a big rally until we were able to get above this. Okay, so you saw rejection here back in April and May. You saw a rejection here in August. And yet again, it got rejected here in November. The price crashed. And what happens when we broke above it in February through April? Well, that's when we went on a huge run. So being above this trend line has indicated, it's been a prognostic sign for the market that people are getting excited about Bitcoin. And that leads to these massive price runs. Even here, we went on this large run up to around 1.2 million active addresses. And we started to make a run again, but what happened? We got rejected right at this level where we had been trending upwards and getting rejected off in the past. We got rejected there, and that's kind of where Bitcoin, if we just line these up, that's kind of right around where Bitcoin made its all-time high, right at this rejection level. And what did that coincide with? It coincided kind of with the Fed saying definitively, hey, we're raising rates. And so right when they said that, maybe we would have gone to some of these higher valuations you heard about. People saying 100,000, something like that. Maybe that could have happened if the timing with the Fed would have been substantially different, but it wasn't. And so, that's not the reality that we're in. And right when they made that announcement, you saw Bitcoin kind of reach up to right around 1 million active addresses, which is in keeping with this trend that we see. We got rejected, and this is where we're at now. We're down here. But ultimately, we've been able to maintain a lot of these users on the network, and that is a positive sign for the long term. So, what I'll be looking for is in the longer term for us to make a move where we break above this. It's going to show a lot of new investors are coming into the market, and it's going to be a sign that it's very likely that we're going to start to see the price move to the upside. And, that doesn't necessarily mean that a new all-time high is right around the corner, because even if you go back and look at some of these prior market cycles, when we made this huge move right here in 2015 into 2016, what happened with the price? Well, we still were kind of going sideways for some time after that, right? We were consolidating for some time after that. In fact, almost a half a year or more. So even when we see that eventual big move, it's still going to be a game of patience, and it's going to be a game of not overreacting to small events that play out, not overreacting to news stories you hear, not overreacting to FUD, not overreacting to positive stories. Being successful in the crypto market is about being level headed. It's about approaching the collection of data, not any single data point, because no single data point almost, has a long-term, long-lasting impact on the price. It's the collection of events that occur and, taking the summation of those events and reacting accordingly over time, never doing anything on a whim in this market, because when you do things on a whim, you tend to be making the wrong decision. So that's going to be it for this one, guys. Until next time, as usual, see you.